So welcome guys. I just wanted to do a quick review of today's price action. I mainly want to cover first presented fair value gaps and how we can trade using this plotting the quadrants on the wicks. So 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 before going into the setups, I'll just explain what I have plotted. So this is the daily chart. This is the 15-minute chart, 5-minute chart, 1 minute and 15-second chart. So what are the levels I have plotted is, so this is the daily wick. So I have plotted all the four quadrant levels. This is another daily wick. So this is a premium wick. This is one more premium wick. So I have plotted all the four quadrant levels here. So now we have this 9:30 a.m. opening session. So as soon as this candle closes with energy, with so much energy, and immediately this is the 15-second chart. You can see we had a retracement, and we can see the candles respecting this first presented fair value gap. So I have used this indicator first fair value gap multi-session. So this will plot all the first fair value gaps formed. So this is the indicator I'm using, which will plot all the first presented fair value gaps. So as soon as this 9:30 a.m. candle slams down, we have a huge fair value gap and we have a retracement. You can see the bodies of the candle respecting this first presented fair value gap. So as soon as this candle closes, I immediately went short here. So I'll just show my executions. So I immediately went short here. So my target was these equal lows and this fair value gap. So but what happened is I put my stop loss, I think, a little bit more aggressive. You can see price came back up. This is the first presented fair value gap of the opening session, 9:32 p.m. 9:32 candle. So this is the CB. So this was the first presented fair value gap, and I put my stop loss somewhere here. So price came back and took my stop loss. You can see here my stop loss is set. I was almost at break even, so nothing much to lose here. So but what I could have done is, if you plot the quadrant levels on this wick, you can see the price came up to this upper quadrant and then we had a rejection. So at least I should have placed my stop loss 50% above this wick. Then I would have been safe, but price came way all the back up to this 75% of this wick. So that is why we need to grade the wicks, guys. We should always grade our wicks with all the quadrant levels. So once this candle immediately closed below this first presented fair value gap, we have this balanced price range, because we offered both buy side and sell side, and we closed below this first presented fair value gap. So as soon as this candle has closed, I immediately went short again. This time I put my stop loss above first presented fair value gap. So you can see this is my next execution. So this was my next, I sold 5 quantity. You can see this in my live stream also. So as soon as this candle closed, I immediately went short on this candle and put my stop loss above the first presented fair value gap. So I entered here and exited. Uh, So my first, so I exited below this equal lows, guys. So this candle, if you see on a 5-minute chart, we have equal lows here. So I exited near these equal lows. So this was my first trade. This was the second trade. The first trade was break even, and this was second trade. And then price chopped around. So now we are entering at 9:40, around 9:40. We are entering into the 950 macro window. You can see price came down and took out this swing low. And see the reaction. This is the 1-minute chart, and a 1-minute chart you can see it is rejecting from one of these quadrant levels, daily wick, premium wick quadrant levels. At the same time, if you look into other time frames, for example, I plot my first presented fair value gaps on a 5-minute chart and a 15-minute chart, even 1 minute and 15-second chart. So if you see on a 15-minute chart, we have this 15-minute first presented fair value gap on of Fridays. Similarly, the same thing again, it is coinciding with PM session. Thursdays after 7 p.m. first presented fair value gap. You can see the reaction. So this is one confluence, this is one confluence, and this is one more confluence. This is one of the daily wick quadrant levels. At the same time, so once we had this reaction, once price took out this sell side liquidity, then price immediately went back up. You can see price staying above these quadrant levels, respecting these quadrant levels. The bodies are staying above this, and even on a 15-second chart, you can see the prices, the bodies are respecting this one of the first presented fair value gaps on a 15-second chart. And even on 1-minute chart or 15-minute chart or 5-minute chart, you can see the price is respecting one of these quadrant levels which I have plotted, these two quadrant levels, these blue. So as soon as I've seen this this candle engulfing this down close candle, I immediately went long again here. You can see I went long here. This was a short which I covered here, 20 lots. So this was 20 long. Again here I added 5 more, and again here I added 5 more, and I exited at the top of this candle, which is nothing but it's a wickless candle. So any candle without wick, either upside or downside, doesn't matter. Any candle without wick will act as liquidity. So that was the reason I just exited here. So this was one more trade. So I'll just remove this. So if you plot these first presented fair value gaps and all these quadrant levels, what it will help you is, like, when price is rejecting or moving away from particular level, it will give you a confidence, like we are moving away from that particular level. So this is coinciding with again this fair value gap, this volume imbalance, this first representation, this first presentation, and this daily quadrant wick, daily wick quadrant. So you could have gone long here. So I went long here and I exited on top of this candle. Now we will try to find multiple setups on lower time frames using our wicks and first presentation fair value gaps. You can see once we had this expansion, this is a bearish fair value gap. If you extend this bearish fair value gap, you can see price went up to 50% of this and had a rejection, and we had a retracement. If you plot these first presented fair value gaps even on 15-second chart, we can see we have one of a first presentation fair value gaps when price is rejecting from there. And now observe this rejection, guys. This rejection into this fair value gap. So we have one more first presentation and coupled with this volume balance. So we had this rejection, again we went back into this fair value gap. Again these red lines are nothing but midpoints of this daily wick quadrants. So again we had rejection from this midpoint. Again we closed below this another midpoint of the daily wick, and then we had this retracement. Now if you observe, there are a couple of first presentation fair value gaps here. Now we want, whenever we see first presentation fair value gaps, we want to see momentum. We want to see some kind of energy move away from that first presentation fair value gaps. Say for example, in this instant, you can see this swing high. After price came into this first presentation fair value gaps, you can see this expansion closing above this swing high. So this candle closed above this first presentation fair value gap, then we could have gone long here. So this is where we could have gone long, first entry. And similarly, if you see this retracement, it is coming back into this mitigation block, or this up close candle, the market makers have accumulated and they went short here. Now when the price is going back up, so they need to mitigate their position. So that is where they are adding their long positions. Now if you observe here, we have these two red lines. Both of them are daily wick quadrant levels, midpoints. So on the 1 minute chart, you can see price is closing above them. Similarly, on a lower time frame, this is the 15-second chart. If you observe on the 15-second chart, what I said is we want to see some kind of momentum or shift in market structure when price moves away from this lower time frame first presented fair value gap. So we have this down close candle and price closed above this down close candle with the body. So now we have an order block confirmation, and then you can see this candle slamming into this CB, which is nothing but one of the first presented fair value gaps, and then we had this expansion. So if you have plotted these quadrant levels, you could have seen this, like when price is retracing, where price is accumulating and where the expansion is happening from where. Similarly, again when price went back up, so we had this continuous rejection here. So what is on again you can see on a 1 minute chart, this is one of the first presented fair value gaps. You can see this continuous rejection from here, right? So again, after rejecting here, then price again came back into this volume imbalance, into this balance to price range, this 1 minute bearish fair value gap if we extend it. So this is a balance to price range now because we closed above this. So when price is retracing back into this balanced price range, we have this volume imbalance. So you can see again price is accumulating around this first presented fair value gaps, this blue color zone, right? This is also one of the first presented fair value gaps. So price is accumulating here. So once the candle closed above these series of down close candles here, we had again a bullish order block confirmation. Then again we could have gone long on the immediate next candle. So again price went back up. We have a rejection block here. So let me plot this rejection block. So we have this rejection block, highest up close candle. Again price came down. Now always See, we have entered long on this candle, right? Once this series of down close candles, this candle engulfed this from this one of the first presented fair value gaps. We had a order block confirmation, but the thing is, this is a wick on a 1 minute time frame. Okay, so this is just a wick on 1 minute time frame. Now plot all the quadrant levels on this wick. So always put your stop loss below 50% of this, maybe somewhere here, you know, this first quadrant, right? You can put your stop loss here. See, price again came back into this 50% of this wick. So you could, if you could have entered here, you have to put your stop loss somewhere here, or you can put at the low of this candle. So that is why plotting the quadrants on the wicks is very important. So once again we had this rejection from the midpoint of this wick, again we are having this expansion. So once again we closed above this series of down close candles, and again you can see where price is accumulating, guys. All the wicks, see, this is one of the first presented fair value gaps on a 1 minute chart. Even on a 15-second chart you can clearly see there are two first presented fair value gaps. So the wicks of the candles are coming down, but the bodies are never closing below this first presented fair value gaps. So which is an indication that price is going to go up. So once you see this signature, again what I said is, whenever we see first presented fair value gaps, we want to see some kind of momentum or shift in market structure, or some kind of fair value gap, or an order block, strong order block to form. So once again this down close candle, you can see this strong expansion. This entire thing overlapping was just consolidation, guys. This is just nothing but, what do you say, building liquidity. All this swing lows, right? This is nothing but market makers are building liquidity. But now once they took out all this liquidity, see this expansion, and see the support from this first presented fair value gap. So you have to wait for this kind of signature. So what you could have done is, once this candle closed above this down close candle, we have bullish order block confirmation, and immediately you could have gone long on this candle. If you have 15-second chart, you could have gone long on this candle. This again, if you plot this small, see, this is small fair value gap. So now this has become a bearish fair value gap. Now after this candle closed above this, we have a balanced price range. So once this candle closed above this down close candle and this bearish fair value gap, now this has become balanced price range, and on the next candle you could have gone immediately long if you have a 15-second chart. In case if you don't have 15-second chart, what you could have done is, again you wait for this, you plot quadrants on this wick, you wait for this 1 minute on a 1 minute chart, you wait for this candle close above 50%. So once this candle closes with the body above 50% of this wick, then only could have gone long. See, again this market makers are again accumulating at the 50% level, and okay, this was one thing. And next, more setups. So once again you can see price coming up to 50% of this level. Now I will plot the quadrants on this wick, guys. So this wick on a 1 minute chart, this is a wick. The same thing if you plot this on a 15-second chart, this is a bullish order block. This down close candle is a bullish order block because this candle is having less body whereas this candle is having more body. You can see this candle is having more body, so this will become a bullish order block because this candle closed above this. So if you plot this, you can see the again the market came back into this order block and the price is staying on the upper half of this order block, so which is a very good signature. So we don't, when we are bullish, we don't want to see price come below 50%. It could be a fair value gap, it could be an order block, it could be mitigation block or whatever, doesn't matter, any PD array. We want to see only price stay above in the top 50%, right? Okay, so once we see this signature, once we see this candles, the bodies of the candles are closing above this, and this candle closes, this candle closes above this series of down close candles, and again I'm plotting quadrants on this wick, guys. So we want to see a closure above 50%, above 50%. So once we had this candle closure above 50%, then on the immediate next candle you could have gone long. See the next candle response where it is reacting. This gray line is nothing but this is the quadrant. These are quadrants plotted on the daily premium wick. So you can see the reaction from this daily quadrants, daily wick quadrants, premium wick quadrants. So you could have gone long on this candle. So in case if you don't have 15-second chart, so why I prefer 15-second chart is it offers more opportunities. It gives setups with less risk. So for example, for the same setup, you have to wait for this candle close above this down close candle and 50% above this wick. So it has happened here. So on the next candle, you could have gone long here. So your setup would be somewhere here. But if you have 15-second chart, once this candle closed above 50% of this, here itself you could have gone long. So almost how many handles we are saving? Like 2.5 handles. Our risk would have been reduced. So again, just I'm trying to find more examples, guys. Okay. So okay, so I have plotted this quadrant levels on this wick. So just I want to see whether we had any divergence at that moment. Where was it? Where is it? What time was it? 11:55 a.m. 11:55 a.m. 11:55 a.m. Okay, here, right? 11:55. Okay. Is there any divergence? No. Yeah, we had a divergence. Here it will be more clear. Yeah. So this is the setup I'm trying to explain. So this swing high, just observe this swing high and this swing high. On ES, we made a higher high. whereas on NASDAQ we made a lower high. ES higher high and NASDAQ lower high. So this is the place where we had the divergence. So once we had the divergence, we have to wait for our macro window and for our shift in market structure confirmation, right? Then only we can take our trade. So here there is nothing to us, just price came back into this fair value gap and just went up. But now if you plot this quadrants on this wick, when this candle closes below 50% of this wick, then we have a confirmation that we are going down, the market is coming down. So on the 1 minute chart, where is the next liquidity or imbalance? So the nearest liquidity or imbalance is, this is the first presented fair value gap coupled with this fair value gap. So if you would have gone short here, you could have exited here. So I've just plotted the four, so you can, the same setup I'll show on a 15-second chart. So these are the 4 quadrant levels. So again, when price came back into this fair value gap, you can see the bodies of the candles are respecting the midpoint, 50% of this wick. Obviously you can even plot this fair value gap also. So the bodies of the candles are staying in the lower half of the fair value gap. So then again price came back, retraced into this. We have a volume imbalance here. We had a volume imbalance, so price came into this and the bodies of the candles stayed below 50% of this wick. So again, so whenever there is a fair value gap or any PD array, we want to see a reaction. We want to see some energetic move, or we want to see some bearish order block or bullish order block or a shift in market structure or anything, something. It has to show us that the market is changing its direction. So once price came into this fair value gap or 50% of this wick, again I'm going to plot quadrants on this wick. This is the 15-second chart, guys. So I'll just explain what happened. So this, just remember, this is the 50% of the 1 minute chart wick, and these 4 quadrant levels I plotted is on this 15-second chart candle. If you see, once price rejected from this, it came back into this 15-second fair value gap, again it went back up. Again the body of the candle, see the body of the candles failing to close above the 50%, slammed down, and I'm waiting for the candle to close below 50% of this wick. So that happens on this candle. So on the immediate next candle, I could have gone short, but we have volume imbalance here. So you could have waited for your entry here, or immediately you could have gone short on this candle. So you could have gone short on this candle, and what would have been your target? Your target would have been first presented fair value gap coupled with the balance, this imbalance. So this could have been one entry, or you could have gone straight away, entered here, or you could have waited and you could have entered at the 50% or at this volume balance. And then once we had a rejection, you can see this candle, this zone is again on a 15-second chart. This is another first presented fair value gap. See the candle, see the body of this candle. It never closed above this first presented fair value gap. So this is a very good signature. So we had this expansion, beautiful expansion from here, and price came into our target. So just to summarize, short, right? Short, yeah. So you could have gone short at the 50% of this, and your stop loss would be on top of this candle, whichever candle has created this fair value gap, and our take profit would be at the inside this fair value gap, which is nothing but first presented fair value gap also. This could have been one trade. So now coming to this 15-second chart, you could have entered or you could have pyramided your position here. So again, I'll just so once this candle closes below 50% of this wick, you could have waited again price to come back into this volume balance, or you could straight away entered on this candle. So again, say suppose you are entered here, again your stop loss would be above this candle, and again your take profit would have been into this first presented fair value gap. So the previous trade, it gave around 3.8 RR. It was on a 1 minute chart, but the same trade, if you take on a 15-second chart, see the RR, it is around 8.4. So that is the reason, guys, I always try to look for entries on 15-second chart. So because it will reduce my risk. So it's almost 1.75, or you could have put your stop loss somewhere here, the top of this candle. But still, it doesn't matter. It's a very good risk to reward ratio. So that is the reason I try to find setups. I try to find my entries on a low time frame. So this was one setup, and what else? And again, price was in complete consolidation here, and you can see the guys. I plotted these 4 quadrants, right? You can see price never went back above this. So it went back up, again rejected, again it went back, again it rejected, again it took out this liquidity, and then it went up. So this entire lunchtime was complete consolidation. You can see price was staying below 50% of this wick. You can see here, here. So once this lunchtime is over, then we have this beautiful setup again. So it is around 1:15 p.m. So price came back and took the liquidity. So price need not come back and take this entire swing low, guys. We have liquidity at the bodies. So once price comes and just even hits this body, this is nothing but a rejection block. So we took out this liquidity, and what we want to see is, like I said, at any PD array we want to see a strong momentum expansion, shift in market structure, or a bullish order block, or a bearish order block, or a bullish fair value gap, or anything which indicates that we are changing the direction. So once lunch is over, market came again. This is first presented fair value gap. So again price rejected from this midpoint of this wick. So came back into this first presentation fair value gap, and you can see this candle, this one single candle energetically, it closed above this opening price. So this is our confirmation, and we had we have a shift in a balanced price range also, because this is a bearish fair value gap, and we engulfed it once, twice, and thrice, and third time this was one single candle. So this is the reaction we should be looking around PDRS, ICT PDRS. So once we had this reaction, then we could have gone long on this candle, and the target would have been these equal highs and this swing high. So I'll just remove this. I think it is creating a lot of confusion. Okay. See this price is getting accumulated around these levels, first presented fair value gaps. Again, this is daily wick quadrant level. So you can see price closed above this 50% of this wick, above this bearish fair value gap also. So this became an inversion fair value gap. So once price closed above 50% of this, you could have gone long on this candle. Again, you can see this is one of our first presented fair value gaps. You can see price came back here and we had this expansion. And next first presentation fair value gap would be at 1:30, post 1:30 p.m. So after 1:30 p.m. we have this first presented fair value gap on a 15-second chart and a 1-minute chart. So you can see price retraced here into this volume balance post 1:30 and then it expanded, but see the bodies of these candles, guys, it failed to close above this. So we have a rejection block here, this up close candle, and price has failed to close above this and started breaking down. So this is on a 15-second chart. You can see this is the reaction again from the one of the first presented fair value gaps. Again, price came back and took out this swing low and hit this top quadrant. So what we want to say is we want to see price respect this first presented fair value gaps and we want to see a shift in market structure or expansion. So once price took out this liquidity and you can see this candle closed above this first presented fair value gap post 1:30 p.m. So on the next candle itself you could have gone long. So the next candle is nothing but this open low and then expansion. So this was the opening, so price came back into this fair value gap, but you can see this is the 15-second chart, price respecting the first presented fair value gap on even 15-second chart. Price did not close below this, just you can see this to the tick, it closed inside the first presented fair value gap. So you could have entered here or you could have waited for this candle to close above this down close candles so that it will become bullish order block and you could have gone long here. So your entry would have been on this candle and your stop loss would have been, this is the order block, right? This is the propulsion block. So somewhere 50% below of this propulsion block. So and you can see the reactions, guys, from this first presented fair value gap. See the wicks. The body is never closed below it. See here again. So this is the kind of reaction we want to see. And again we had this expansion. So that's it, guys. So if you are conscious while observing the price, where the wicks are forming, how they are forming, and where the divergences are happening, and how price is reacting around these wicks, around these quadrant levels, and if you plot this first presented fair value gaps on both 15-second chart and 1-minute chart, even 15-minute chart and 5-minute chart, it will help you a lot. See, if I did not plot this daily quadrant wicks, I would have been waiting for this. What do you say? We have this, we have this new day opening gap. I would have been waiting for the price to come back into this PD array, but there are other PD arrays here above that. For example, this 7 p.m. fair value gap first presented on a 15 chart. We have this opening session first presented fair value gap and daily wick quadrant. So and see the reaction from here. So that is why if you plot all these levels, it will be easy to identify what price is doing. So that's it, guys, for today's price action review. Thank you.